I'm going to try to attempt to explain to you the negative volume index, which is a study available in thinkorswim and probably on other platforms, and you can get more information about it from Wikipedia. It was developed 75 years ago by Paul Dysart. I'll show you what the calculations are. I'll use three charts, Apple, Netflix, and Mosaic, to demonstrate for you how the calculations are made and how you could potentially interpret them. What Paul Dysart developed was further extended by Fosbeck, and he made some theories about when you can use the negative volume index and the positive volume index. Dysart's theory was that if a volume advances and prices move up or down in accordance with volume, the move is assumed to be a good movement. And then he adds, if it is sustained when the volume subsides. And what the negative volume index is all about is studying price movements on periods when the volume is lower than the preceding period, whether it's a day or a week, hour, 30 minutes, 4 hours. Fosbeck's book, called Stock Market Logic, is available from Amazon. You can find used copies for as low as $5 or $6. And there's only about 6 pages in that book which deal with the negative volume index, so it's a pretty easy read. And it's a pretty fascinating study. Basically what it does is it takes the negative volume index from yesterday, multiplies it by the percentage change in price, so yesterday's price minus today's price divided by yesterday's price, and it takes that product and adds it to yesterday's negative volume index. Fosbeck said that whenever the NVI is above its 1-year moving average, there's a 96% probability that a bull market is in progress, because his studies were done with the market indexes. The positive volume index is not as accurate, and that's a 79% probability. Now, the reason that one is more accurate than the other is on low volume days, it's presumed that that's the days when smart money is in making buys and sells. On heavy volume days, whether they be up days or down days, that's when the crowd is in buying and selling. And the data that's generated on crowd selling buying days, positive volume days, is found to be not as reliable as negative volume days or days when the volume is less than the preceding day. So let's take a look at 3 charts. Let's take a look at Apple, and here's 1 year, and you can see that the negative volume index down here was flat for the longest period of time, and then beginning of the year 2010 it started to move up, went into a flat phase, and now it's started to move up again. Let's just zoom into this period here where we've got a V-shaped pattern in price, and we can see from here to here when the price was going down, this is a linear regression line drawn through those candles. We had one low volume day here, which is lower than the preceding day. This day was lower than that day. This day lower than that day. This day lower than that day. So we had 4 low volume days in that period. And 1, 2, 3, I said there was 4, there's the 4th, were pretty much doji days. The negative volume index didn't change when the price was moving down. That's to be viewed as a sign of strength. So when we had a reversal candle, we had strength preceding it in the negative volume index, and we had upward movement, but even in here, we had several days, like even the very first day after the reversal, the volume was less than the day before, but the index still went up. Then we had another low volume day and several others, so many low volume days indicated by the green solid lines in this uptrend. And the net result is that the negative volume index really accelerated after having this strong period. So this is the kind of thing that you're looking for. When the stock is moving down, if the negative volume index is flat, that's to be viewed as a sign of strength. Let's go to our next stock now, which is Netflix. And here you see a different picture altogether. Here you see a negative volume index, unlike Apple, which was flat and then moved up. We had a very strong negative volume index last year, and then it started to tail off. This is not a moving average, it's sort of a mean line, because I can't do a moving average on the negative volume index. But around November, it started to fall below the average and continued to move below the average until it hit its low back in May. Now it started to move up, but it's still below the highs and above the lows in the past year. So now let's take a look at a V pattern here. And what we see is quite different from Apple. We see the negative volume index moving down with decreasing price action. And then when the stock rebounded, the negative volume index did not pick up. That's not a sign of strength. Nonetheless, price started to move up. Here you would look at the positive volume index because it's obvious now that the price is moving up only on positive volume days for the most part. Here we have this N pattern, and we have an upwards move in the volume index, flat, so that's a bit of strength now. We saw it moving up, then we saw it moving down in price, but the negative volume index stayed flat. Then we had this movement up, negative volume index moved up, but it's still a weak stock, and then today we had this massive reversal candle, a $12 4% drop in Netflix. So could it be because we haven't seen strength in the negative volume index or people buying the stock, accumulating the stock on low volume days? That's what the negative volume index would seem to point to. Here's Mosaic. Let's take a look at Mosaic, which has had its share of ownership troubles, as well as other things. And we can see that it moved pretty low, then it started to pick up, and then it started to accelerate. I studied this period in here, where we have this V pattern, and then most recently a flag, and I highlighted the days where we had low volume with these green lines, just like in the other charts. So in this down period, we had 1, 2, 3, 4, 5 ending. The crescendo here was a 6th down day, and yet we had an upwards move of the negative volume index. Let me just delete that drawing, and let's go back and let's draw proper linear regressions for these periods. So starting with this here down to here, with price declining, we saw a flat negative volume index like we did with Apple. And then with price increasing, we saw the negative volume increase. And now in this pennant formation, what do we have here? We have slightly decreasing negative volume index, but not at an alarming rate. So this shows that there's still continued strength in Mosaic, and we do have accumulation in the stock on those smart money days. The index, remember that the index does not move on up volume days. The index only moves down or up when the candle of that day is lower than the preceding day. Disclaimer, I use this to help me trade in swing trades. I'm not recommending it for anyone. What I would recommend is that you add the study to your charts, see if it provides you with any useful information, and I suggest you check out this book and just do some searches on the internet about negative volume index.